The Nasdaq has rallied 10% since last Friday's intraday low, led by mega-cap names like Apple. For more on whether the bounce can be trusted, let's bring in Mark LEHMANN. He is JPM Securities CEO, and Gene Munster, Loup Ventures Managing Director. Gene, I'll start with you because I know you follow Apple almost closer than anybody else. Up about 8% this week. So what from here?
I think we're going to see a nice bear market rally. There's a lot to love about these rallies, and they can be pretty significant. I think Apple's going to participate in that, Scott. And if you look at the frequency of these rallies, they've happened 16 times since 2000. And the magnitude has been surprisingly impressive. They're up 22%. So just to kind of frame in that, you mentioned the Nasdaq up 10% over the past week. That would suggest that this bear market rally is going to, we're about halfway through it. There's still another, call it 12% upside to this. And so I would say this, enjoy this, but be brave as tech investors because we are not through the bottom of this. And if I may just continue with the thought quickly, is that a bear market rally will end, all good bear market rallies end until there is visibility that fundamentals are improving. And if we fast forward a month from now and start thinking about how investors are going to be positioning themselves for the June quarter results, I suspect that we're going to see some cautious anxiety amongst investors because the March quarter, we looked at 20 tech companies. 11 of the 20 largest tech companies had negative commentary regarding June. We think that that is going to stir concern from investors. And so, put it simply, Scott, just enjoy this ride, the next 10%, and then batten the hatches down because it's going to get bad.
I mean, I think, Mark, a lot of people would take that 10%. That sounds optimistic. I don't know whether you believe it or not. Do you?
Well, you're right. I think most people would take another 10%. I was on the show a week ago, and it's up 10% from then. And that Friday, a week ago, everybody was chiding anybody who talked tech positively. So that's how fast things can move. I do agree with Gene. I think we're going to start to look at the June quarter pretty soon. But we've seen some numbers in the last few days. You looked at Workday's numbers when they reported and others. Expectations and analyst guides are going down. And at the same time, some of these stocks are performing just fine. So that gives me a little bit of confidence. We've also seen some things that are obviously backdrops that are terrific. We saw some M&A this week in a large takeover, which is the kind of indications you want where people are using some of the balance sheet. Because these balance sheets for these tech companies are in durable shape. And what they do with it is going to be fun to watch over the next 2-3 quarters. And I'm looking at that. And again, this week showed some evidence of those signs.
Adam Parker was waving his hands like he wanted to get in.
Oh, look, there's 40 years of history where the analyst estimates can come down and the market can rally. So what I don't want people to be confused about is you can have earnings grow year over year and still have the earnings expectations come down. Right now, they're for 9% earnings growth in 2022 versus 2021. That's what the bottom-up analyst estimates are for. If we get revisions down to 6% growth, that could still be perfectly fine for equity markets. So you can have downward revisions in an upward equity market, and we've had that a lot in the last 45 years.
So, Gene, I mean, Apple really specifically, the talk about iPhone production numbers coming down, should we believe any of that?
Well, it's true. The production numbers have come down, and it's you can believe it, but you have to put it in a context. Is that it's standard operating procedure for Apple to initially tell its suppliers to have produce a large number of iPhones, and then it's operating procedure to tell them to cut production because they always do that. And so I think that's where you get some of the noise around these data points with the market backdrop. I think it can get people concerned. And I want to be clear here. Apple is, if we go into a recession, Apple, their business will be negatively impacted, just like everyone's business. I think we're going into a recession. And so to answer your question is that we should be, there is concern related to some of these data points. But ultimately, I think in Apple's case, I think it will outperform many of these other companies because essentially we can't live without it. They fall into that category of can't live without it. And also, they have other products coming. And we're going to probably hear more about that on June 6th at their developers conference. And so there is room for optimism when you think about the growth piece of Apple in the next few years.